Welcome back, folks. Dow's off 5 1/4. Nasdaq is off 180. S&Ps are down 30. Let's go over to our man, Mr. Basil Chapman from the Chapman Wave. Don't forget, folks, Basil does an outstanding show here every trading day, 12 to 1 Eastern Standard Time. Also has a great newsletter, The Opening Call. The way you get the opening call, come over to our website at TFNN. You're going to see it. You hit newsletters. You're going to see it right in the very top. You just hit it. You hit subscribe. You can get Basil's newsletter for 1 month for $128. You can get it for $6 for $5.95, which is a savings of $173 at 22%. You can get it for a year for $9.95, which is a savings of $541 or 35%. Now, Basil has done a lot of workshops. He just did a workshop about 4 weeks ago, actually 3 weeks ago, and it couldn't have been not only a better workshop, but a better time to do it in. So once you hit subscribe, you are also going to get all those workshops, folks. Everything to win, 0 to lose. They all come with a 30-day money-back guarantee. Ride that wave. Man, we got hurricane waves out here, Basil.
Oh, yeah. This is certainly torrential storms. So this, you mentioned the timing of my workshop, and basically it was talking about the dark cloud news cover.
Yes.
And really what it says is, over the years, if you follow the market long enough, you get to understand that there are some aspects to the news that you personally could interpret very negatively or very positively, but the market responds in its own way, and that's what you've got to be monitoring. It's way more important to see what did the market think of it than what you thought of it. So the emphasis here was, yes, we've had many periods over certainly the last year. We've had impeachment, we've had China tariffs, we've had interest rates, we've had just a smorgasbord of issues that could have been really important, and each time the market basically shrugged it off, except for when Powell kept on wanting to raise rates back in December of going into the low of December 2018.
Yes.
So what I've been telling subscribers is we've got to be real careful here, because other things besides news are saying that the market has pretty much limited upside, and we don't know yet what the downside is like, but let's raise cash. So what we've been doing for my subscribers to my opening call, we've raised a lot of cash. We've had some stocks that we've had for ages, even that Bank of America that we had way back from December a year ago at 24. We got out of that with a profit. I just didn't want to take any risk here, because this is an unknown in the sense that
that's a fact.
We just don't know. I spoke to my son last night. He says, working in Manhattan, he says, on the train, you see people with masks. You don't know what's going on. It's kind of frightening. He's never experienced that before, and he knows from business that at least from his experience, from what he's been hearing, 25-30% of the major companies that he deals with are stopping all travel. So,
well, and you know what? In that aspect, go ahead to hear this. So, what just happened came across the tape, folks. J.P. Morgan is keeping 25,000 of their employees home tomorrow to test drive.
Tomorrow.
They're test driving that in case something happens, they've had this in place that in case something happens that they get quarantined. So they're putting 10% of their workforce. They're going to have them work out of the house and see if they can still, operate as they expect to operate. They've had this plan in place, evidently, but this just came across the tape, which is pretty smart,
wow.
Really. Yeah.
Well, I guess let me just have a look. Yeah, that's the reason why Zoom is zooming. This is Zoom video, because people are going to be conferencing. So basically what happened is we got a lot into cash. And here, yesterday morning, from everything I was looking at, it seemed to me that we had reached a very oversold condition, and that crazy 1,000 points 20-minute run to the upside on Friday seemed to me it was options expiration for the weekly options. It was just a host of things said overbought, oversold, and people started to chase it. And then, of course, the shorts had to cover. Then we saw Sunday a whopping 1,000 point up and down. It was crazy. So when we started to see a decline very early in the morning, I'm doing it 6 o'clock in the morning. Yesterday, I thought, you know what? I think they're going to try to run it up again. So we were very lucky. We put in a price for the Dow Diamonds. That's basically the Dow trading vehicle. And there was just a moment after my newsletter went out. There was a little period where the market kept falling back. We got into the trade. It went just a tad lower, and then it took off. And once it takes off, it's really difficult in these conditions to try to chase it. So we were very lucky to get in. Then this morning I said, you know what we're going to do? This is just a test case for us to see how does the market hold? Can it make a new recovery high? Can it hold to the high of the day, or is it going to give back a chunk? So let's raise the stop on a very small part of the position. And so that we took money off just off the high today. We've still got this core position long. And I'm saying this is so important now because the market has to make its own decisions. And what I would look at is rather the numbers to tell me what's going on than for me to tell the market. So now I'm telling you that I would look to see if I'd said Thursday, maybe it could go to Friday. I really don't care. I don't want today's low of 25,700 taken out. If it takes it out, we might have to just restart the whole thing, or it keeps going down. But if for more than a bounce, for something like a little bit of a rally, I would like to see the 27,400 level taken out. That's the 200-period moving average on this chart on the left. That's the daily. It's also with the black line. This is the 14-period exponential moving averages. But you can see the MACD, the moving average, is very weak. Stochastic's rallying, but it's still only 18%. It's not way above 20%. And look at this weekly chart, a peak D at 29,568, all-time high, and it goes straight down 5,000 points almost to 24,681. It's you can't just turn around and make that up. So I think that people just need to be, I said this last time when we spoke last week, I said, just be very careful, try to raise some money, and you will be, and pick your favorite stocks, look for prices that you think maybe you'll start to enter. Don't get carried away. I think you're going to have time. I see nothing here that can take the market to a new all-time high unless a week from probably, give it a full week, not this week, but next week. By the end of next week, if we are not seeing a really big increase in the coronavirus for people who are maybe targeted as having, maybe not the virus itself, but quarantine, if things start to slow down, maybe that'll be a sign to say that it's not quite as bad. But we'll see. So I'm just saying, still be careful. I think that you've got time, and even today there was a chance that we could rebound. The market is taking it very seriously. I think that a lot of people are saying, you know what, this doesn't look good. And you can see the way gold suddenly spiked up today. People are being quite defensive. But the one thing that I would say is the VIX index trading at 3718 made a high of 49.48 3 days ago, and even with today's action, it's still very much 12 points off that high. So that says, watch the volatility index. If it starts to pull back, gets under 30, and the market's able to rebound, that'll be a good sign. But you don't want to see it trading up in the 40 area. That's not good.
And folks, the way you get Basil's newsletter, come over to our website at TFNN. You go into newsletters, you're going to see right on the right-hand side. You just hit subscribe. Basil, you have a great one, safe one. We look forward to the show tomorrow.
Thank you very much, Tom.
Thank you. Stay right there, folks. Come right back.